Hey there, everybody. Welcome back to the Finding Financial Fitness Show. I'm your host, Nino Gonzalez, joined again by my co-host, Pei Chen, and a very special guest, friend, Jordan Bingham. Jordan, welcome to the show.
Appreciate it. Glad to be here.
And before we get into it, I just want to let the audience know if there's people in here that have listening to the show that have known me since I was younger, they'll know that I've known Jordan since I was probably 8 years old. We played soccer together, grew up together. Our families are really close. And it's funny because you and I both, it's funny, really strange because we both played soccer, right? We both went in that direction of soccer. And then I think you went a little bit further ahead playing college and I didn't. And then afterwards, I went into the health world and so did you as well, right? And then slowly but surely, you made your way into the finance world. I made my way into the finance world. And then you and I just kind of caught up again, maybe a year ago or 6 months ago. And we're kind of running in the same sector, but obviously with the finance world, there's so many different things so many opportunities. So I wanted to bring you on because I think you have such a unique background, a unique thing, what you're doing right now. So if you see my camera freeze or anything, don't worry about it. But tell me, Jordan, what's your job title? What do you do for a living? Talk to me a little bit.
Sure. Yeah. So I'm in the wealth management business at a high level. I guess my title is wealth advisor. We're licensed financial advisors at its core. Now, that term is used quite frequently amongst a lot of different people. We're a holistic wealth management firm, registered investment advisor, independent fiduciary type structure. We're fee for advice type business. We don't make commissions legally for selling products, or we're not compensated by any third party for using their products. So I would say at its core, our job is in the planning itself. I work with a lot of different types of clients, ranging in areas of net worth. For someone to hire us, normally, they've got to have some level of asset base. Where someone is just getting started saving some money, putting some money away, we always want to help who we can help. In that situation, it doesn't make sense to hire us. So for me, if someone has more than $3 million of liquid investable assets, that is maybe typically where it starts to make sense in that range, just because our level of expertise goes much beyond, well, what do I invest in? Everything from estate planning and risk management to tax planning. Now, full disclosure, I'm not a CPA, so I legally can't give tax advice, but we kind of want to operate like a quarterback for a client and coordinate with their CPAs, their attorneys, and 9 times out of 10, someone who's got a lot of money might have professionals, but they're not talking to each other, or they're not working together on behalf of the client. So we try to bring all those different parties together and do what's in the best interest of the client. We take a very educational approach with our clients, and we find that eliminates a lot of the back end headache that most people have, issues with down the line. But I'd say at its core, comprehensive wealth management, ranging from all those different areas, if that makes sense.
I have limited knowledge on this particular topic. So I'm going to ask from the layman's term. So is this similar to like a family office where, like, I would imagine like a wealthy family, you've done certain level of wealth building up to a certain point, to the point where you're starting to realize I need to hand over what I have built now to the professional team to either, you were talking about asset protection, to not just like continue to build, but to start protecting, and kind of how do I leave it to the next generation to take over?
Yeah, that's correct. Absolutely. Most family offices are going to be some sort of RIA, registered investment advisory structure, but they work with a handful of families. I mean, I know a close family friend of ours works with the family office for the Nordstrom family, as an example, and he's got like 4 clients because think about the size of the Nordstrom family and the brand in itself. So it's going to be that style of structure, but we're not technically a family office because we don't work with one family. We don't want to be all things to all people, and we can't. We want to be all things to some people, which is our core competency around certain areas of net worth and where it can make sense to hire us. Someone's worth $1 billion, it probably doesn't make sense to hire us. That person needs a family office. You're talking the 10 to 300 million range probably is in our sweet spot, bread and butter. for planning. Obviously, the more that person's worth, the more complicated it can get, the more people need to be involved. So we just try to add value where we can. But yes, a lot of it, I mean, estate planning is a big piece, asset protection, tax planning, passing on to the next generation, especially with ever-changing estate tax laws.
Yeah. Oh no, most definitely. And it's interesting because I think you're basically separating it into not only three categories of wealth, but it's kind of separating it that way where it's like under 10 mil net worth, maybe under 3 million. At that point, people are still in the accumulation phase where it's go make money, go keep making that money. But you get to a certain point where, and Pei and I have talked about this on the podcast, you have to start protecting that money and you have to start sheltering that money. And I don't think most people have that plan when they start making money. They just think about making money.
It's not mutually exclusive though. That's the thing.
Talk to me about that.
So a lot of the clients that we meet are later, obviously, later on in life, they've had time to build businesses or they've had an exit strategy in some capacity. Now, this world is a little bit different today because you're seeing a lot of tech millionaires, a lot of social media content creating millionaires. I have my youngest client's 20 years old. He's not thinking about protecting money. He's thinking about building his business. When I met him, he was trying to decide if he's going to college and he was building his content and his social media structure. And now he's, on pace to make 500,000 a month. So we're having conversations around not only asset accumulation, where do you put dollars, and educating around different types of vehicles and how to essentially accumulate, but also around protection, because you get to a certain level, you don't necessarily care as much about earning a few extra basis points on a rate of return. It's about tax planning. It's about passing to the next generation. It's about making sure you protect what you've built. So if you can create a solid foundation, that's why they're not mutually exclusive. If you understand what maybe the roadmap might look like for your situation, you can create that solid foundation of building to protect without affecting your accumulation.
Yeah, that's huge, because I think most people going into investing, if you're just starting out, typically it's okay, well, I need to make money to get me out of my current lifestyle, running the rat race, having to work from somebody else. Then from there, it's okay, I've have enough money to cover my basic expenses. Now I want to make more. I want to start living my dream lifestyle. But I think once people get to that actual time, they don't necessarily think about protecting in the future. They're like, I just want to make this money. And you mentioned with the younger generation now, because there are all these tech millionaires at a younger age, that the perspective tends to be a little bit different from people that are older, which is kind of what I wanted to pivot it toward. Because do you see in the majority of your clients, because you would think once you get to a certain net worth, all right, I'm done. I'm just I can just live off of my assets for the rest of my life and just kick my feet up. But oftentimes it's the opposite. Those are the ones that tend to work the hardest. So since you've had experience with a wide range of clients, what's your experience with that? Do you feel like when people are coming to you with this net worth, do you see them kind of taking the foot off the gas, or what's the process look with that?
That's a great question. I mean, I think I see both. Quite honestly, I've met some people who get to a certain level and they were blue collar worker types businesses and they worked hard their entire lives, but they became very wealthy through like an exit, for example, of owning a company. They might take their foot off the gas, but they work differently. It may seem like they're taking their foot off the gas, but maybe they're just doing different things than they were doing before. So to them, it's not as hard of work as it was prior in their prior life. So it's maybe they think they're taking their foot off the gas, but they always have their hand in something. They're always doing some level of some business activity, whether it's buying more property and developing, whether it's, getting into private equity. One thing that's interesting about that group of people, one common thread that I've noticed when they get to a certain level, and I'm not talking like billionaire type structure, you're talking 50 to 100 million net worth, let's say. Right? Blue collar, small town people who built it on their own for the most part. The biggest thing that they're concerned with is getting sued and losing everything. So I see it all the time with real estate investors. I don't want to get sued by a tenant and lose properties. They want to protect what they built. I have one client right now, he's offloading all of his apartment buildings and he's keeping his commercial, industrial, or government, leased buildings because it, triple net has the least amount of risk associated with it. He doesn't want to deal with tenants anymore. And it's probably 13 or 14 million in properties that he's getting rid of. And he just doesn't want the risk. He's all about protecting what he's built at this point. he doesn't need any more, but he's the type of guy who still does hard money lending constantly. He'll lend out privately all the time for projects. That's how he keeps busy. Multiple houses, right? Travel, play golf, do all those things. So he's doing more than he was when he was building, but he's still doing something. So I think taking your foot off the gas is relative, because I think maybe pursuing new challenges is the right term. They're always trying to better themselves and pursue new challenges. That's the difference than taking your foot off the gas. They're not going to just sit around and do nothing. I've not seen that.
I think on this podcast, we've been kind of dissecting and researching and talking to a lot of people, just trying to find that common thread that you're talking about, and also that DNA. There are certain type of people or a certain type of DNA in certain type of people that are just destined to do these kind of things, right? Yeah, it's interesting to see what that is. And you obviously see it at a higher level. We kind of see it at kind of a beginner level, where we encounter a lot of people who are trying to get to that stage, but you're at a stage, this is fascinating for us that are seeing those people. Like, they're already self-selecting themselves there.
It's funny because like maybe they were a little bit out of shape when they were running their business, but wealthy. Now, prime example is new challenges. They're in shape. They're healthier than they've ever been. They built the net worth. I don't also think that health and finances are mutually exclusive either. I think, if you're focused on, in my life, it's four things. It's, your faith, my family, my kids, my wife, my finances, and my fitness, my health. I don't think those things are mutually exclusive either. I don't think you need to sacrifice one to be successful in any of the others. I do think you go through periods in time where you might be more focused on one thing versus the other, depending on the business, right? But I don't think those things are mutually exclusive either. I think you can do all of them very well.
Yeah, and it sounds like the behaviors that what makes a good father, what makes a good spouse, what makes a good business person, and what makes a good, well-off, healthy person, those attributes are all the same. And again, that's the kind of the basis of this podcast, is everything is connected, how we do that. And I think it's just so good to see, because I've always been on the impression, and I think a lot of people are, that once you get to X amount of money, then I can relax and I can stop. But Pei and I, whenever we're on vacation, whenever we're traveling, even though we're comfortable, we live comfortably, it's always, how can we save? How can we make some extra money? I remember, because we were literally just in North Carolina this weekend. We were kayaking around Lake Norman, and we see houses and we're thinking, I wonder how much that house could be. I wonder how much that house could Airbnb for, right? And and that's what we're trying to wonder. Is it a DNA thing, that's something that somebody's born with, or is it just born through, you kind of pick it up, you start learning, you start working? And because your clientele are from, like you mentioned, different backgrounds. Some are blue collar, but some maybe have a little bit more of a family backing to it. So going forward with that, and as what you've seen and as you design kind of strategies, how do you treat people in terms of investment options that you give them for people at different areas of net worth? So how would a portfolio analysis look for someone who might have a net worth of 5 million compared to someone who has a net worth of 20, 30, 40, 50 million?
Yeah, I think that's a great question too. So for every one of our clients, it doesn't matter who it is, how much they're worth. I take everybody through the same process. I don't care how much they know or how sophisticated they are. We take everyone through the same exact process. And the reason we do that is to not only simplify their life and start to tailor things, but then everyone can get on the same page with what they need in handling different issues. And so for a client who is worth 5 million versus 50, it's still the educational process. It's understanding what's available to them. What are they currently doing? What are they trying to accomplish? Right? It's asset and time segmentation of dollars. It's how much risk and volatility versus when do you need that money and what's it for? If you got an extra $30 million that you don't need and it's still in your estate, but the plan is to pass it down to your kids, well, why is it sitting maybe in cash? Maybe go buy property in a trust outside of the estate for the benefit of the kids and have that asset grow tax-free from the estate perspective. So it comes down from a recommendation standpoint to who the client is, what they're trying to accomplish. The beauty and what I love about what I do now, because I've been on both sides of the business, I know when you're handcuffed and you have a big firm telling you what you can and can't do, and being completely free to say, look, let's explore all the options and we'll go through education on each piece so you understand the different pieces and you decide. it's not up to me. It's not my money, right? That's what I tell people. And so I think it just varies, right? Because everyone's got a certain level of risk. Some people are comfortable with markets, some people are not. Some people are comfortable with private equities, credit strategies, alternative type structured investments, and some aren't. I've seen lower net worth, like in terms of our conversation with our clientele, let's say somebody worth 10 to 15 million, be so complicated and sophisticated with their structure of investments. And then somebody the same net worth who did it very simply. The person who, and there's also, so I think something to this effect too, which is the more complicated adds more stress and headache. And it's evident in the client situation. And it's, if he's okay with it, it's fine. But there's a lot of lack of education that he didn't get, invested in things he didn't quite understand. He's got 150 private equity investments or whatever, and they're all, spread out doing different things. And then you got the person over here who built it through, let's say, real estate, and they've got maybe some liquidity, doing some basic stuff. They might be living a little more simply and maybe a little more happy. It just depends on the client, who they are and what they're trying to accomplish. My experience, though, has been the more sophisticated somebody's situation, the more complex, the more all the stuff they have to deal with. And if you have a team, so our team puts up with it, right? We do that for clients and we help manage those things, the process for those things, then it can take some weight off your shoulders. But in reality, simplicity is not always a bad thing because it allows you to continuously grow your money. And if you have other areas of your life that are important to you, you can focus on those as well, instead of constantly being worried about money or the next transaction that's got to take place. I don't know if that makes sense. If I answered your question.
No, it totally resonates with me.
Oh my god.
Sure.
No, both of us. It's such a, I mean, Paige, you probably have something to say as well. But for me, what I was going to just take away from that is because when you first start out, oftentimes the recommendation is diversify. So we're told to learn about all these different avenues, right? Okay, we'll get some in real estate. Well, what if the real estate market crashes? We need to go into the stock market. Okay, well, what if the stock market crashes? We need to go alternative investing. And from what I'm gathering from you and from the experience you've had with yourself and people at that level, it's get good at one avenue, focus on that avenue, and then let that be your main source. Not saying you can't dabble in other things, but I will speak for myself. When I first started out, I wanted to learn everything. And that becomes very overwhelming to have to manage everything, because then you have to pay attention to all the markets and everything going on. That you mentioned, having to stress over every little transaction. It truly becomes that. And your life revolves around money, which is kind of not the whole point. You want to have money be a tool for you. But Pei, I don't know, do you have something to add? 'Cause I know you had something to say with this.
No, I mean, just the same thing, right? The same cycle that we trap ourselves into, right? Our goal is to have a simpler life when we are financially free. But then in order to get there, we go through these like complicated setups when sometimes the simplest thing can get us there just as well as the complex things. And actually the simpler the things are, the easier we can relax, which is what we were looking for to begin with, right? So it's funny. Yeah. I love simple things though.
I couldn't agree more. I mean, when you're first starting and you're making, let's say you don't come from money, you're not making money, and you just start getting into your career, and let's say you're starting to put a little bit of money away and starting to build a little bit of a nest egg. Diversification, people talk about it, like you mentioned, like all the time, I was the same way. You try to do a bunch of different things, start multiple companies, you want to invest in different things. It takes away from the core focus of building one thing great. If you can build one thing and build that to have, be at a certain level, it enables you to then diversify appropriately. If you don't have a lot of money, it's the same conversation. If you have $1,000 versus $1 million and you diversify in the same things, how likely is the $1 million going to be different than the 1,000 in terms of rate of return over time and volatility? I mean, it's just different. And so focusing on one thing allows you to build something that's self-sustaining and that's efficient, that allows you to create. I mean, how many people do you know that became successful building one company, one business, right? They didn't become successful building 9 different companies at one time. They might have 9 companies now, But that's through years of building maybe doing one thing very well, and then spiraling into different avenues. And so simplicity is not a bad thing, but again, it's not my job to tell somebody what to do. It's to educate them on how to do the different things and let them decide. Now, I'll tell you, most of the time people are choosing more simple solutions than complex, just because peace of mind.
And what's that worth? I mean, and that's another thing that because you can't put a price tag on it, truly, the sense of peace and ease. And I've seen that myself. Once I started taking money out of crazy, and Pei and I were on this journey together, we start putting money into just wild investments, speculative things that we think is going to work. And then we just kind of honed in, and where we've been at this year as well is kind of back to the basics. All right, let's become great at one thing and focus on churning our money through that. And not only because, as you very well know, when you're in one sector, you never know enough. The deeper you go into it, the more you realize, I don't know enough about this. And as you spend more time and growing in that and mastering it, then once you accumulate X amount of money that you can cover, then it's okay to start diversifying that into other options, which is what you're saying. And I fully agree in that. It took me time to find that out through trial and error and through experience. And just so interesting to see that the problems and the thoughts that people have transcend all money levels, whether you're making 1,000, 1,000,000, 10 million, 20 million, it's all the same. It's all very similar to the problems that people have. So the sooner you can understand, no matter where you're starting, I think the better. Which you mentioned education, which is a big piece, something I wanted to touch on right now, because Pei's been a teacher her whole life. And now, even right now, she teaches and helps, and hence the podcast as well. Do you find that clients that have a higher net worth are less receptive or more receptive to education that you provide?
More receptive. Think about the types of people who become wealthy. Do they do it theoretically by themselves? Those are types of people that know how to ask for help. They know how to employ a team in some capacity, and they're an expert in what they're an expert in. And the reason they hire us is because they don't want to deal with it, right? So they want to outsource some of these things. And so they're, in my experience, they're more receptive to education. They want to know how things work. Most people do. They don't want to manage it or the process. That's the main difference. It's not that they can't. Anybody can, right? If you do enough homework and research and you put enough time into it, the question is do you want to at that level? And that's the separator. We still take them through the same education, right? Like, I don't care how sophisticated you are with understanding the market. The first question, around investments is, do you know what a stock is? Do you know what a bond is? But you know what it does, though? It leads us into this conversation of the simple to the more complex and how we get there, right? And how things are set up and structured. And most people will tell us, look, we've never had anything explained to us like that before. We know what these things are, but we've never had it explained in a way to where it makes sense, to where we understand what we're actually, informed enough to be able to make a decision on something. And so my experience is more, they want to be educated. They're more receptive to it. And there's always those people who aren't, that like to do it themselves, but those aren't our clients.
Like that they take that, who not how, but not to the extreme level. I feel like we are about to get to that stage where we're just saying like, okay, I know the basics and I know the information enough to know that I don't want to become the expert in this. Therefore, I'm going to find the expert and let the expert do what they're supposed to do.
I'm the same way. You have to know how to ask for help. You have to know, most of those people, they want help. They're an expert in what they're an expert in, and that's what they want to focus on. They want to spend time with their families. They want to live their life and not have to think about this. It goes back to that same conversation. Even if you're at a certain level of net worth, if you have too many complicated things going on to manage yourself, it's going to drive you crazy.
And that's something that we have mentioned here as well, about essentially finding your hourly rate. And I think where it starts on the very small level. It's about, okay, well, I mow my lawn to save money. Okay, well, then I start making more money. Well, now I'm going to pay a gardener to mow my lawn. It's the same concept, just at scale, right? Once you realize, okay, well, paying a gardener $30 an hour is worth it. It's the same thing if you're at that point, you're making 50,000 a year. Well, then when you're making 5 million a year and you're wanting to pay 3,000, 30,000, 300,000 to a company, to a person to help offset some of your tasks, what does that do? It frees up your time. I'm not sure, Jordan, if you're familiar with Dan Martell, the book Buy Back Your Time, right? And how he talks about those concepts. And essentially it just comes back to the whole purpose. Money allows us to buy back our time, as opposed to when we work, we normally trade our time for money. And it's just flipping the inverse to that.
Well, like when you start a business, right? And let's say you start making 10 grand a month in your business. Do you take that and start living on 10 grand a month, or do you maintain maybe the same lifestyle you had and hire somebody and expand your business? It's the same. You're just buying more time to grow. And so if you don't understand that concept, it's hard to grow because you never will. You're always going to be trading your time for money. It's the difference between being a business owner and being self-employed. If you're a business owner, you can step away from your business, right? It can run itself. If you're self-employed, you're working in your business, or you never work on it and expand it that way. And so that's constantly in the back of my head as a common theme, right? People who are successful, they get to a point where they trade their money for time because they don't want to manage all the different things.
You're speaking Pei's language, talking about the cash flow quadrant with Kiyosaki's book. Because she mentioned, you're talking about the ESBI.
Sure.
It's that. I know that's what Pei always likes to talk.
It's true. I mean, it's very true. Like one of my first not hiccups, but one of my first experiences with that was when we hired our first assistant years ago. Can't afford her, but it's going to free up my time, right? Like keeping your lifestyle at a certain point. And now, like we've grown so much, and my time now is only spent meeting with clients and really just working through big picture stuff. And I pass off everything that I would have done in the past. So I hired that person before I was ready in my mind, and it's paid off. And so sometimes you do have to take a little bit of chance there. But if you don't understand that, it's going to be hard to grow. You're just going to constantly be working in your business. And you know my family very well, and you know exactly what I grew up with, and it's still the same conversation. So my dad's in construction. He owns his own company, but he's self-employed. He cannot step away. He's still, 60 years old, works 6-7 days a week constantly because he has to be involved in everything.
No, it's the same. I mean, it was the same. It's because it was the same thing with our families growing up, right? And that's where I think it's so unique to see where the two of us are now, knowing our backgrounds, where our parents, it's almost like our parents are still doing the exact same thing that our parents were doing when we were younger. And they, and that's where we kind of come into this with a different perspective. And it's not to say that there's anything wrong with
that's what I was going to say. I don't think there's a right or wrong here at the end of the day. I just know that I don't want to do that forever.
Correct. Well, and you have the option now because the money's been there. And again, we are where we are because of the opportunities that were given to us by our parents and by the people in our lives. But now we have the unique opportunity to create that and to build that. Something Pei always talks about, because, Pei and I are different age groups, and she always, she has a daughter who's 16 going into college. And we talked about this yesterday as well. It's giving that opportunity to, we as the younger generation have different opportunities than our parents and our parents' generations did. So we can share that message earlier on. Well, then it gives people the opportunity. And that, I'm assuming, Pei, you agree, given the fact that as a teacher, you only want the best for your students, similar to as a parent.
Oh, yeah. I mean, that's the point, right? I am trading time to lay down the track, and the hope, also feel the same, that they've done their job and they've done their job the best that they can, right? But if you guys, the next generation, are coming in and you're still doing the same thing, and that would be the problem. That would be where I would be like, okay, that's not how it should be, right? It should be, every generation should be better than the next. You know what I mean? Like the last.
Which kind of brings me to, I want to know, Jordan, you mentioned one of the things with the clients you work with and at that wealth level, you mentioned some of their attributes being the desire for education, desire to learn more. What are some other attributes that you find to be prevalent in that? I'm just curious to see, so that people can kind of get behind the scenes dive, if you will, into it.
Yeah, it's another good question. I think from my experience, health is a big one. I mean, I know some very, very successful people who are also in very good shape. Their health is a priority, and their families are a priority over everything, even money. There's that concept of balance, right? That people talk about, the 9-to-5 balance. I want a balanced life. I don't personally believe in that. I think there's priorities that you can focus on. And if you're building something of value, it's maybe you're prioritizing building a business, and that is going to take more priority over health for a period of time, because, you've got certain things you've got to deal with. But other attributes, I think health is a big one. because it's the one thing you can't buy. It does buy you medical care, it does provide security and those things in the future, but why not take care of those things now so you don't have health issues in the future? So it's either, pay for it today or pay for it sometime down the road, right? Pay for it today through a workout and eating right, or pay for it down the road in the form of medical bills. And so I think health is another big aspect. It's this concept of trying to live up to your full potential in whatever area that is, being the best father, being the best, husband, being the best mother, being the best in shape, being the best fitness, right? Health wise, being the best in business. Doesn't matter what it is. It's trying to just constantly get better and better. And if it's just going to run away from you.
Now I
If
have
you
a
chase-
question.
Yeah, go
I
ahead.
have, I have a question about, obviously you deal with a lot of different, high net worth families, right? So how do they involve their children in this process?
That is a great question. From my experience, they involve them in the process. Usually not initially, but eventually they'll be involved where like we'll step in and help educate kids and help them get started where, just putting some money away and just building good savings habits. We do a concept of, when we're working through estate planning or anything big with, a client through the initial process, we'll do family meetings, right? Let's say we get through everything and they've got adult kids. We'll bring in the CPAs, attorneys, we'll be there, the mom and dad, the kids. We'll do a big family meeting and go through everything. Here's where the estate is. And some parents are more, private and don't want to share maybe specific numbers, and that's fine. But we need to know who are the important contacts. We need to know how the money flows, who are the trustees and beneficiaries, and when can they access money, and here's where the accounts are if something happens to us. It's important to know, not only savings habits as you get started, but it's important to know terms, right? What is a beneficiary? What's a trustee of a trust? Who do I talk to? What's probate? You guys don't live in California. I don't know about you, Pay. I know Nina's not in California, but Texas. California probate's not ideal. It can be very expensive and take a long time. And so if you can avoid that, ideally that'd be the best situation possible. So I think involving their kids is very important. I do have one client that was worth quite a bit, and his wife doesn't even know what he has. Different situation. They married later in life and they already had each of their kids. I think she knows some, but he's got a lot going on that she just doesn't. He set it up though to where if something happens to her, she's going to get a certain amount of income for the rest of her life and be taken care of. I mean, the point is that she doesn't know what is out there and what's going on. There's not many people who know. He's very secretive. There's not many people who know what he has. And you would never know because he drives a pickup truck. He's in that middle ground, probably worth about 100. I've also had a client worth in the 4 to 500 range, a lot of it in real estate. They did all their estate planning and all the adult kids were involved. They know, there's still some assets that are, protected where they don't know the values of everything, but they know the structure and who does what and, what's the plan for after they're gone. That's important to know. The last thing you want to do is leave your kids in a place where they have to figure out what to do. Something I've thought a lot about. Yeah.
And you don't want to set them up. I call them waiters, right? You don't want to set up a situation where they're like, oh, okay, this is all coming to me. Let me just wait for you to die.
Yeah. I mean, most of those most of the wealthier families they'll have trusts set up where there's stipulations on either what money can be used and by what age and when can they control it. Because the two most important questions you have to ask with an estate plan is who gets everything and who controls everything. Could be two different people, right? That doesn't include the tax planning, but that's really what the goal is who gets everything. Could be the government if you don't do anything about it, and who controls everything. You don't want to leave $300 million to an 18-year-old kid. Something happened to you. I mean, going back, when I was 18, I wouldn't trust myself with that type of money, knowing what I know now. No way. 50.
They say that it's harder to preserve wealth than to build wealth.
I have one client now. It's in process. The father set up the trust to give his son the trust when he's 65, when he retires. And the reason is the son is not doing too great, like kind of a screw up a little bit. And so his rationale is the fact that, look, he can go do whatever he wants and screw up, but you know what? At least I'll help him retire. You can really do whatever you want. Again, it goes back to complexity and how much work and thought do you want to put into this type of stuff. You're worth $20 million, it's probably a non-issue. You're worth $1 billion, different conversation.
It's so interesting, man. I mean, the whole dynamics, because it makes, I remember just growing up and thinking about the quote unquote wealthy, and obviously my definition of what wealthy is changes, right? As you make more money, then that becomes further and further away. You start moving the goalposts. But it's just interesting to see that there are, at the end of the day, these people are still humans and they still have struggles, albeit their own struggles at their own levels. But kind of the one thing that I like to ask guests that we have on, and kind of just always like to conclude with, and not trying to put you on the spot, but I am going to put you on the spot. What does wealth mean to you, given all the history and knowledge you have and people you've interacted with? What does wealth mean to you?
Oh, it's a great question. It's one that I've thought about quite a bit, and my perspective consistently changes. It meant something to me before I had kids. As soon as I had my first daughter, it changed. Where I'm at now, so I've got two kids, one in kindergarten, one a little bit younger, one on the way. To me, it's about being able to provide for my family. So being able to provide basic expenses. We have a nice house, food on the table. I can spend time with my kids. I'm not run by my business. I run it. I don't let it run me. I control my time. We do what we want. To me, wealth at that point is being healthy, eating right, being able to afford the best food, right? Being able to take vacations. I'm not driving around in a Lamborghini, but that was just something that was, what I wanted when I was younger. And then it changed. And I'm not saying I won't own one at some point, but right now car seats don't really fit in it, unfortunately. Convince my wife otherwise. It used to be material things, wealth. Today, it's about the intangibles. It's about time for me. It's about working and serving my clients. It's about making an impact in the world, being compensated for it, and being able to do what I want on a regular basis. And so I don't have to clock in anywhere. I don't have anybody telling me what I can and can't do. I can spend as much time with my kids as I want, as long as I build it into my calendar. Some weeks are a little bit harder to pick up and drop off from school. As you guys know, you go ebbs and flows. But I do it to myself. That's the thing. I'm the one who controls the calendar. So sometimes I do it to myself.
Right. You're the one that, if you're like, man, where did all my day go? Then you have to remind yourself that you choose every day what goes on your calendar, which is a blessing, but it can be a curse if you don't know how to stop and if you don't know how to control it. So
yeah, 1 week I'll have 35 meetings and 12-hour days, and then the next I'll have 2 or 3. Well, I haven't had one with just 2 or 3 in a while, but the concept of why did I do that to myself? Looking back on it, hindsight 2020. I'm still on a growth phase. We're growing our business and we're very blessed because we don't advertise. We're all word of mouth. And so we average, maybe 2 to 4 referrals a week from just random introductions from people who are looking for help. And so we're very blessed. And honestly, I don't get tired because it doesn't feel like work to me at this point, because I feel like we're making a big impact. I'm in a place where I truly believe what we do is the best for people. I think wealth to me, it'll change again over time. I mean, I'm not where I want to be financially. I have goals and aspirations on the money side, just like I do on the family and the health side as well. But for where I'm at today, that's what it is just being able to live every day and be present, because I wasn't for a long time. It was always about to some future date, right? So when I get to this point, I'll be happy. It's changed. It's changed substantially. I'm a lot I don't have anxiety anymore. I don't worry anymore. I'm just kind of like, you know what? Today is today and we're going to enjoy it.
So well said. No, man, that's
I don't
so
know
well
if that
said.
answered your question, but yeah.
No, more than answered my question, because and it's nice and refreshing. And I've shared this with Pay multiple times, that it's one thing to meet people in their later half of life, in their 60s and 70s, who are sharing that information because they've gone through so much more than we have at our age, right? To be able to experience different things than they have, but to be able to take that wisdom. It's like when we talk about paying for somebody's 10,000 hours. If I want to learn a craft and learn an experience, I'm going to pay someone to teach me. And it's the same thing when it comes to just general health and general happiness. If I can learn from their experiences and start implementing that at a young age, it gives me more time to live a more fulfilled life. And consequentially with that, be able to share that message with others and teach them to then have a healthy and happy life as well. So I have a soft spot for it, obviously, because I've known you my whole life, and also because you're at my age as well, that it's rare to find that breed. And that's why I like to maintain that. And I have a lot to learn from you. I've learned a lot from you throughout this whole process. So I'm grateful that
Well,
you share
that's
those.
both ways. You guys know I
Yeah,
feel like I'm probably a lot more on the alternative side of things than I
for
do.
sure.
But I had one client tell me this one time before we wrap up. He said he's older. He's got 10 grandkids now. He's not old, but he's in his 60s. He's got 10 grandkids, multiple homes, like 4 boats, and just does whatever he wants at this point. And he said, you know what? I could have been a lot more wealthy, but I have fun with my life. And he's like, I never sacrificed that. He's like, I spent money and I probably could have been smarter, but you know what? We do whatever we want. There's still, you still have to save. You can't spend every dollar. People have this misconception. If I have $10 million, I'll be happy. Okay, well, tell me right now, you have $10 million in the bank. What would you do?
That's like we asked this question on the show. You're right.
They can't answer that question because they don't have a purpose.
You're speaking our language, man. I'm so glad we had you on.
I'm worried about my kids. My kids are going to have a lot of money and I'm trying to teach them a value of a dollar, but they don't have any concept. Not quite. My 5-year-old they're so spoiled. Both of them are, and they just don't have any concept of money. And I'm trying to eventually make them work, put them to work, do something.
It's like, what do you mean I have to empty the trash can in the office? Don't you have a worker for that?
It's exactly right.
Hey, anything you wanted to any final thoughts, questions, or anything you wanted to wrap up before I close it out?
No, I would like to one day be able to meet you in person, Jordan, and continue this conversation. But I feel like
absolutely
we're definitely on the same wavelength. So nice meeting you.
Absolutely. I appreciate you guys having me on. A lot of fun.
Yeah, Jordan, again, thanks, man. It's been a ride to have known you for over 20 years and to see what you're doing now, the wisdom that you have, the family that you've built, the business that you've built. It's inspirational, not just for myself, but for plenty of people that are listening and coming in, just hearing it for the first time. So I want to say thank you again. Thanks for sharing your experience. And I guarantee you, we're going to have people listening to this podcast, friends that we have, that will get to the point where they're going to want to work with you and can work with you. And that's the goal. It's to show, we want people to hear this because we want to inspire people, to show people, right, that there's a light there, and give people motivation and incentive to keep going.
Yeah, I appreciate that, and you guys too, and watching you grow, not height wise, but with everything else over the course of your life. I think you're the same size when you came out. Every other area of your life has been great. They do. I think you can get knee implants now, right?
I know, Jordan. I know. If you know someone, let me know. We'll bring them on the show. Stop it.
We'll have to interview them first.
I'm just kidding.
I love you, buddy. Oh man, appreciate it. No, but thanks, Jordan. Thanks, Pei, for hopping on today. Thanks everybody for listening to this week's episode of Finding Financial Fitness. Stay tuned for more episodes. Take care.